Hi there, I'm Gareth. Welcome to this online lecture where I'm going to talk a little bit about one of the key tasks in the processing bookkeeping transactions unit. And we're going to have a think about task number 3, where we're going to be looking at the 3-column cash book. Let's perhaps start with some real basic principles here with the cash book. Now, when you're dealing with the cash book, cash, whether it's cash held in physical cash or money sitting in your bank account, that's an asset of the business. Now, if you think about your basic double entry principles, if you're debiting an asset, you're increasing that asset. So the debit side of the cash book will be dealing with receipts that the business is making. So perhaps a customer paying you money, that's going to increase your asset. On the other side of the cash books, on the credit side, well, credits will be reducing an asset. So the credit side of the cash book is where we're making payments. So perhaps we're writing a check to a supplier, and if we make that payment, that's going to reduce the amount of cash we've got. So just firstly be aware, debit side is the receipts that we're getting, the credit side is the payments that we're making. Well, we're going to have a look at this example. And this example, very similar to the kind of thing you're likely to see in task 3 of your assessment, dealing with a 3-column cash book. And in fact, before we even start worrying about the information we're going to include, let's just have a look at the 3-column cash book we're going to be starting with. Now, you might notice that we are dealing with the credit side of the cash book. So these are the payments that the business is making. This will be money going out of their bank account, or out of the physical amount of cash they've got. Now, one thing to make sure you're comfortable, when we talk about a 3-column cash book, that name is perhaps slightly misleading because you can see the cash book we've got here has got far more than 3 columns, hasn't it? But when we talk about a 3-column cash book, the 3 columns we're talking about, the key columns we've got here, are firstly a column for keeping track of the bank account. Now, it's literally looking at how much we've got sitting in our bank balance. We've then got a column for the cash account. So if we've actually got physical notes and coins, physical cash in the business, sometimes some customers might pay you in the form of cash. You can imagine if you're a shop, for instance. And the third column is the discounts column. Now, bear in mind, the discounts column, sometimes referred to as a memorandum or memo column, because in this case, the discounts might relate to discounts that we've received from a supplier, for instance. And can you imagine, by definition, if you've received a discount from a supplier, the actual amount you will have paid the supplier is going to be less than you owed them. You can imagine if you owed a supplier £100 and they give you a discount of £10 when you settle that invoice, you're only actually going to pay them £90. So the reason we describe that discounts column as a memo column is it's literally not an amount that's been paid in the form of either checks or cash, but we've got to keep track of any discounts to make sure that they are then accounted for properly in our general ledger. So when we talk about a 3-column cash book, those are the 3 columns that we're referring to. You can see there's obviously then additional columns that we're going to be interested in, and these are basically the analysis columns, which help us to explain what some of the payments are. You can imagine if you've got a payment coming out of the bank, so if you've written a cheque, it'd be useful to analyse, well, what exactly does that cheque relate to? If you're writing a cheque to a credit supplier, for instance, we could analyse it therefore as being related to the purchase ledger or the trade payables, because the purchase ledger is where we would have our list of the credit suppliers we owe money to. So the analysis columns are really just going to give a breakdown of where these payments are going to, what the payments relate to. Well, let's have a look at the transactions that we need to enter into our cash book here. So we've basically got 3 payments that we've made, and it makes sense that we're dealing with payments. Remember, we're starting with the credit side of the cash book, so amounts going out of our bank account or out of our physical pile of cash. And in fact, we've got broken down into 2 types of payments. We've got some cash purchases paid for in cash, and we've also got some trade payables who are being paid for by cheque. Now, the first thing to think about is if I'm paying in the form of cash, then that will be the cash column in the 3-column cash book. If I'm paying by cheque, well, that's money that's actually then going to go out of my bank account, isn't it? If you write a cheque, it doesn't affect the physical pile of cash you've got in the office, it affects what's in your bank account. So the first thing to understand is that of the 3 payments, we've got one that we're going to be categorising as a cash payment, and 2 of them here that are going to be categorised as bank payments. Well, let's start with a transaction for Bob. So Bob Limited is a supplier here. Perhaps they're a supplier that doesn't offer us credit, so we've had to pay them in physical cash as we make the transaction. Now you can see for the Bob transaction, we've got a full analysis of that purchase, given the net value, the VAT, and the gross value. Now the first thing to think about is how much will I actually have to pay Bob? Well, I'll have to pay Bob the full gross value of the purchase. Bob needs to charge me, including VAT, so I'll be paying a full £240. That's how much my asset is going to reduce by, and remember, it's the cash asset. So if we start entering the transaction for Bob into our 3-column cash book, now make sure you complete the detail column, and you should have a drop-down menu when you're doing the assessment, and if you click on the drop-down menu, you'll have lots of different options to choose from. And the one to choose is in this case, the supplier that we're paying the money to. So I'd click on Bob. Now remember, this is a payment in cash. So the total amount that I want to recognise in the cash column is the gross value of 240. That's literally how much is going to be coming out of my cash balance. And we then need to analyse it. Now the key with the analysis columns is this is effectively where my double entry would ultimately be coming from. So whatever I'm posting as the credit to cash, I would then have corresponding debits totaling the same amount. So you just got to make sure that you're posting the same in total to the analysis columns, but obviously the analysis needs to be broken down. Because if you remember, the gross value of 240, that's the full amount coming out of my cash balance, but the net value of the transaction is only 200. That's the expense that I would ultimately suffer, because remember, businesses get to reclaim the VAT they suffer on purchases. So we'd be looking to reclaim, and in this case it would be input VAT. We'd be reclaiming input VAT of £40. So if I now show the analysis of £40 of VAT, and the net value goes to the cash purchases. This isn't anything to do with the purchase ledger. Remember, the purchase ledger is the list of suppliers that we owe money to. And remember, Bob wasn't giving me credit. I had to pay Bob cash, didn't I? So the 200 is shown. And do bear in mind that all expenses, such as purchases or telephone bills, all expenses should be shown net, because the business only suffers the net cost. We will be reclaiming, in this case, the £40 of VAT. So I think that's my cash purchase for Bob entered. We've then got the 2 cheques that we wrote to a couple of credit suppliers. So these are suppliers who obviously give me credit. They would therefore be recognised on my purchase ledger. I might have owed them this money for a few weeks, and I'm now settling the bill. Now let's start with Charlie. Now Charlie, I have evidently owed £2,000 to, because I paid them £2,000 with no discount taken. So perhaps I didn't settle early with Charlie. Now, remember, these are cheque payments. These need to be categorised as bank. This won't be affecting my cash account. This will be affecting my bank account. So the amount that I paid to Charlie was £2,000. So I need to have that effectively as the credit to the bank account. And again, we then need the analysis of it. Now, in terms of the analysis, remember, when we're dealing with a transaction from Charlie, so again, on your drop-down menu, you'd have an option for Charlie Limited, this credit supplier that we're now dealing with. They were a credit supplier, so they would therefore be on the purchase ledger. And in fact, the full £2,000 would be recognised, and ultimately that would be a debit going to the purchase ledger. That's reducing the amount we owe to that supplier. Now you can see we only need to enter the 2,000 in a single column there. You don't need to worry about VAT when you're settling an outstanding purchase ledger balance like that, because the VAT would already have been accounted for when we made the original purchase. You can imagine back a few weeks ago, perhaps in the previous month, when we originally made the credit purchase from Charlie, we'd have dealt with the VAT at that point. So you don't need to worry about VAT when you're settling an outstanding purchase ledger balance. That would already have been accounted for. And in fact, I only need to enter those figures for Charlie Limited. Remember, there was no discount to worry about. But when I then start to look at David PLC, well, if you look at the figures, I think I must have owed David actually a total of 3,300. I must have made credit purchases worth 3,300 because I've paid £3,000 as a cheque. That's the amount that will be coming out of my bank account. And I've taken a discount of £300. So by taking the discount, I wouldn't need to have paid the entire amount I owed. So in terms of the transaction, and again, my drop-down menu would give me an option for David PLC. The total amount we've paid them is £3,000. That's the cheque I've written. That's what will be coming out of my bank account. Now again, just complete the double entry for that. That's effectively the credit to bank. And again, a bit like with the Charlie Limited transaction, we just complete the double entry by showing what would be a debit to the purchase ledger. We'll need to be reducing the purchase ledger by that 3,000. And this hopefully is where you can start to see why we need this memorandum discounts column. You can imagine if I just left it at the 3,000 we've paid David. Now if you remember, we thought we probably owed David 3,300, but if I'm only recognising 3,000 against the purchase ledger, that's going to leave a 300 outstanding balance. It's going to look like I still owe David £300 because we've only actually paid them 3,000. But the thing is, I don't owe them 300 because they've given me a discount. And this is why we therefore need the memorandum discounts column. So I put the value of the discount, in this case 300, in there. And I only need to show that figure once because the memorandum discounts column, that's actually going to create a full double entry of its own. So with the memorandum discounts column, it's really just a note to remind yourself that you have had a 300 discount from one of your suppliers, and that will also need to be accounted for in the general ledger. So I think I've now entered all three transactions. We've got the single cash transaction as a credit to cash. We've got the two cheque transactions as a credit to the bank. And we've also shown the analysis of each of those transactions as to what they relate to, including VAT where relevant. And we've got the memorandum discount, just noting any discounts that we received from our supplier. And the final job you'll then have to do is just add up each of the columns. And don't forget to do that. That's the easy bit. So you can see in the memorandum discounts column, we've just got the 300. We've got the 240 on the cash column. And when you're adding up the bank column, just be a bit careful. It's easy to miss the fact that there was a balance brought down on the bank column. Now, the fact that the balance brought down was on the credit side of the cash book, well, a credit is actually a liability rather than an asset. So the fact that the bank had a balance brought down of 1,000 on the credit side tells me I was actually already £1,000 overdrawn. I actually owed the bank £1,000. It's a liability here on the credit side, but don't forget to include that 1,000 when you're adding up the bank column. So you can imagine if this is all that had happened, if I was already 1,000 overdrawn and I've written two further cheques for 2,000 and 3,000, I'd become even more overdrawn. In fact, if you add that up, I think I would be 6,000 overdrawn if that was all that had happened. We've then got the 40 in the VAT column, 5,000 in total, which are the cheque payments we made to our credit suppliers, and then the 200 net value of the cash purchases. So don't forget to add up the totals. And that's effectively me now completed task A here, just completing the three-column cash book on the credit side for these three payments that we made. Well, that was the credit side of the cash book. We're now told a bit about the debit side of the cash book. Now remember, the debit side of the cash book will be showing receipts and positive balances, because remember, debits are assets, aren't they? So if I've got a debit side balance, and in fact we're told that the cash balance brought forward at the beginning of the week was £500, because remember, we saw that the bank account had a brought forward credit balance, we were overdrawn on the bank, but you can see we didn't have a brought down balance on the credit side of the cash account. We've actually got a brought down balance on the cash account on the debit side. We have got a positive amount of cash. We've got £500 sitting in the form of physical cash. We're then told that a further £250 was received during the week. So maybe we've had some payments from some customers. Now you can imagine if you receive further cash, that's going to be a further debit, isn't it? That's going to increase the asset. In fact, you can perhaps imagine if that was all that had happened, we had 500, received another 250, that would take me to £750, wouldn't it? But is that all that happened? Well, actually, no. Because we've already seen on the credit side that we did have that one transaction on the credit side of the cash account. And in fact, if you take the total figure, can you see what we're saying is in total in the week, £240 came out of the cash balance. So in fact, what will my balance at the end of the week be? Well, if I do a little working here, remember we started with £500, the balance brought forward on the debit side. We received a further £250, that would be an additional debit to the cash account, but then we need to knock off that 240 from the total on the credit side, because credits to the cash account will reduce the amount of cash, giving a cash balance at the end of the week of £510. But one other way to think of it is, can you see that if we've received 250 and paid at 240, we're going to be £10 higher than we started with. So what you're basically doing is combining the debits on the cash account that we have of the 500 and the 250 with the credit that we actually established back in part A. So I think the balance on the cash balance, the physical amount of cash we've got, will be 510 at the end of the week. We're then given a bit of additional information about the bank balance. We're told that on the debit side of the cash book, so again, debit side is receipts, the total amount of money banked during the week was 4,200. So this is money going into the bank account, which is just as well, because if you remember back in part A, we had quite a lot of money going out of the bank account. In fact, we said if nothing else had happened, we'd end up 6,000 overdrawn by the end of the week. Well, something else has happened. We've now received £4,200 as a debit. Now, that isn't going to be enough to clear the overdraft, but you can imagine if we started with the credit side entries totaling 6,000, the credit side is effectively a negative balance on the bank account. We can then add on the debit we've just been told about, the banking of 4,200, that's money going into the bank account. And if we combine those two, I think that our closing balance at the end of the week will be minus 1,800. So I'm still going to be overdrawn, and because I'm still going to be overdrawn, do make sure you show a minus sign in your answer, otherwise the computer will think it's positive balance of 1,800, so we're still going to be overdrawn, but it's not as bad as being 6,000 overdrawn. But you can see a similar approach to what we did with the cash account. You're just combining what we saw on the credit side of the cash account, that total of 6,000, with what they've now just told us about the debit side of the account, the 4,200 we'd received. Well, hopefully that's been useful in helping you to decipher what goes on in task 3. This is one style of task you might see in your assessment. There are other styles, so do make sure you're practicing a wide variety of these types of tasks with the 3-column cash book. But apart from that, I hope you found that useful, and I will see you soon.